My name's Andre Liebenberg. I'm the Chief Executive Officer of Yellowcake PLC. Yellowcake is a holder of physical uranium. We've created an opportunity for investors to invest in the uranium commodity through the stock of the company. Uranium is a very difficult commodity to own personally, individually, and even for most investors. So Yellowcake has been set up to create that opportunity for investors.
Andre, good to see you. I'm going to say welcome to Cape Town, but you're from here.
Yeah, this is my hometown.
This is your hometown, raised and born. Born and raised, sorry.
Not born here, but
okay, oh, fantastic. Well, look, you have been at the one-to-one conference. I think I know there's Indaba going on as well in the background, but who have you been meeting?
We've come here to really spread the story around uranium and Yellowcake specifically. It's always a good opportunity because the mining industry congregates here, and it's not only the people you see within the one-to-one conference, but it's walking around, bumping into people you've known from, I've been in this industry for 25 odd years, so both, talking to investors, engaging with investors and with other people in the mining sector. Right.
So I think it's really important that we kind of kick off and try and understand your business model, as in, one, perhaps maybe what the thesis was when you kicked off and started, and then two, how you go about funding the business of buying physical uranium.
Right. So when we set Yellowcake up back in July 2018, we started working on the project in 2017. And at that time, we were in a seriously oversupplied spot market. We saw Kazatomprom and Cameco take the first steps to curtail production. The Langham Heinrich mine had been put into care and maintenance. We saw uranium $17 to $20. And very simplistically for us, when we looked at supply demand, it just seemed that this commodity had to go up. It was at the bottom end of the cycle. Demand was visible and growing, not spectacularly, but supply, we hadn't seen any new supply being built, and we saw supply starting to come out of the market. So that really was the thesis for setting up Yellowcake.
Right. But as it turns out, the market seems to be awash with products in terms of, that was 2017, 2018, 2019, 2021. Here we are today in 2022. The market started moving really significantly sort of from August last year. So they seem to be like, well, do you agree with that? Because I know a number of fund managers who perhaps said, now's the time, but it just took a little bit longer than everyone expected. Do you understand why?
Well, two aspects to that. I think firstly, the equity markets anticipated that, the fact that uranium had to go up. Mm-hmm. And we saw really from the fourth quarter of 2020, the equity market started moving up. If you look at Global X as the ETF proxy for the industry, it had gone up significantly, and yet the uranium price had gone sideways. So I think the equity market saw what was happening. We'd seen the resolution of the policy issues in the US. We saw the Democrats embracing nuclear. We saw a whole raft of countries making commitments to carbon neutrality, and increasingly nuclear was part of that discussion. So I think when we set ourselves up, I always say that for me, uranium was a supply side story, not a demand side story. If you look at copper, you look at demand, you look at China. I think in uranium, it was more around the supply side. Where was the supply going to come from? So, I said there was sort of modest demand growth in 2018. But as we went through, with the policy issues being resolved, with the Democrats embracing nuclear, with these carbon neutral commitments, the demand side looked increasingly attractive. And then with the excitement around small modular reactors. So I would argue where we sit today, the demand side looks better than it did back in 2018. And the supply side arguably looks worse. In 2018-19, production was 160 million pounds in 2016. Then it dropped down to 140 million pounds. We saw with COVID, 2020, 2021, production of around 125 million pounds. This year is going to be 130 to 135, but demand's north of 180. So we've transitioned from an oversupplied market into an undersupplied market. And then, we made a lot of purchases last year. There were other companies that made purchases. And then the Sprott Uranium Trust vehicle came to market and had a large impact on the spot market. So I think the setup for uranium today is about as good as it has been in a very, very long time.
I'd absolutely agree with that. I would agree with that. I think we were talking about off camera about Chinese investing $400 billion in nuclear reactor infrastructure. It's okay. Someone's happy. But we also needed a little bit of COVID affecting supply as well, didn't we? Do you know what I mean? It's like the opaque nature of this industry is the thing that fascinates me. The geopolitics is interesting, but the fact that the data isn't kind of readily available to work out who's got what. You've got some of the trade bodies saying, well, okay, we've got utilities sitting on, well, most recently, 18 months worth, right? Normally they sit on what? 2.5, 3 years worth. So we can see what's happened there, but I just wondered why we couldn't read it better before sort of COVID came along and affected supply like it did, for people to start paying attention to their sector. And the only reason I ask is because I think I'm wondering what else I may be missing in terms of the thesis, or is it all out in the open now?
Well, I think it's not one thing. So it's all incremental, it builds and builds and builds. And then, then wouldn't say the dam burst, but, the momentum builds. So I look back last year, we did 3 equity raises. So our equity raise in March, we wanted to raise $100 million to draw down our Kazatomprom option for 2021. Yeah. The book was very heavily oversubscribed. We took $140 million. But that $140 million came from essentially 25 investors. So these were guys who'd studied the market, had been looking at it for a long time, and had conviction. When we did our third raise in October last year, we raised $150 million, again, with a significantly oversubscribed book. We had 65 investors, or between 60 and 70 investors in that same book size. So it shows you, well, for me, we transitioned from specialist with conviction to generalist. And the way I saw that unfold is I had a lot of inbound from generalists. We saw a lot of retail activity. When we IPO'd, we had no retail shareholders. We've got 23% today. And, inbounds from journalists wanting to talk about uranium. So I think, yes, the first wave of COVID did sort of shine a light, again, on the supply side, which is my big point in this industry. 4 countries produce 3/4 of the world's uranium. 3 of those countries were impacted by COVID. So, the 2 commodities that popped during that COVID period were gold and uranium. And I think, nothing creates attention when something goes up significantly. So I think that was, kind of the start of the interest. But the interest in uranium certainly broadened significantly.
So can we look at some of the factors which have sort of changed the market dynamic since, in the last, say, two and a half or so years, which is obviously you guys have been there for a while. Then you have this big old beast, Sprott Physical Uranium Trust, set up and start buying, big amounts in the marketplace from sort of July sort of time, and really start to move the spot price, which is the thing that people look at. They look at the spot price, right? Companies need the term price, but the market looks at the spot price. And then you've got ANU, which is the Kazatomprom version of the same concept, right? So you're taking lots of pounds out of the market, which is really, really good news. But the utilities kind of seem to have, held firm, as it were. They're not giving clues as to, how they're feeling about the supply deficit. And there's not been a lot of term sheets, some term sheets, but not a lot of term sheets. Would you have expected them to be moving by now?
I think they are moving. It's just they're not very, very visible. The term contract, look at Cameco's results for the first quarter. They said they put 40 million pounds under contract in 6 weeks. And that's a big number. So I think, again, the supply side issues from COVID, supply chain, Sprott, ourselves, Sprott, Kazakh unrest, Ukraine invasion. It's one thing layered on top of another, and eventually, it builds that momentum. Because I think if you look at the uranium price, when we IPO'd in 2018, we made our first purchase at 2101. Uranium, I think, for 2019 traded 24 to 26 for the whole year. Then it sort of crept up to 30, and then it was 28 to 34, and we got to 34 and then drifted back. And so I think, the utilities probably thought, that this thing goes up and then drifts back. And we saw that, when Spot came to market, we went up to 40, then we drifted back, then we went to 50, we drifted back, 60, So, but I think now the utilities will, all the anecdotal evidence is that they are contracting or starting to contract. And for me, when I look at the Paladin announcement, for the first time, we've seen a utility write a contract on new supply. Yes, it's a restart project, but that tells me that someone out there is seeing the need for new supply.
Right.
So, I think that is a huge positive. Some people get scared. Well, there's new supply coming to the market. This is supply that's needed.
Yeah.
And the utility has seen that and said, I need to underpin that.
How Paladin is going to be producing how much a year?
I think it'll go up to about 4 million pounds.
So you need a lot more.
You need a lot more.
Right.
We do a lot of work with the McKinsey's Mindspan product, and their analysis shows that you short 30 million pounds by 2030 and a lot more by 2035. Now, Kazakhstan as a country produces between 50 and 60 million pounds today. 30 million pounds is half your biggest global supplier. So, and uranium doesn't appear at the flick of a switch. Yeah. It takes, does it 5-10 years to permit, build, commission, deliver a mine that's fully operating.
And then you've got to process it, enrich it, convert it.
Yeah. Then the other parts of the fuel chain are sort of more immediate concerns.
But just on that point, you mentioned the Russian-Ukraine conflict at the moment, but also who the main players are. On the conversion enrichment side, Russia is what percent? 35, 40% of that?
35% of global conversion and about 45% of enrichment.
Right. So there's not a quick fix for that. And you talked about energy security, that everyone's now sort of, I think there was a kind of move towards globalization over the last 20, 30 years. We've seen that. And now with those sort of moves with COVID again affecting supply chains, commodity pricing going up, and specifically energy pricing going up, that's all going to change. Is that good news for uranium and nuclear?
I think fundamentally, if you need nuclear as baseload power in a diversified energy portfolio, now you have energy security, and the beauty about nuclear is it's very, very energy dense, and you can store, a lot of uranium in a small space. So I think all of these factors have increased the sort of, the positive side of nuclear and uranium. But short term, so that's medium to long term. I just think the story continues to grow in a positive direction. In the very short term is what happens with conversion, what happens with enrichment, and what happens in the geopolitics. Does something, happen that we have a, kind of unwind all the kind of tragedy of the last few months. Yeah. And if you're an enricher, you're saying to yourself, well, if I want to build new capacity, we saw the world change very quickly in February. What happens if it changes again, later in the year? So I think that uncertainty makes it very difficult for people to make investment decisions.
But do governments have to step in and kind of breach that gap? Because as you say, as a bank, I'm not going to step into that situation. There's too many unknowns. I could lose
it really
everything.
Depends how far the energy security debate goes, where governments decide that it's that critical that they will underpin the financing for enrichment capacity. I don't know. But it's just...
But it's not only that, they have to underpin all the other energy as well in the meantime to make up for the deficit, the impact potentially, that could occur. If you say, right, we're cutting off sanctioning all Russian energy supply, whether not just nuclear, but gas, etc. Right?
When you say cut off the supply, really what you are doing is that supply will redirect somewhere else
To China.
at a lower price. So you're effectively putting a tax on Russian energy. So, it doesn't disappear. It goes somewhere else, but at a different price. So,
but it's still going to fill the gap, and that's fine. Redistribution is fine, assuming there's enough of it. But if you were saying that there's a deficit in place, something, it's not like someone's going to then, redistribute energy from somewhere else over to you. There isn't any.
No. On that side, the conversion and enrichment, if you don't want to utilize, Russian product, you have to build your own. There's no
or plug the gap with
ground,
renewable or gas is where I was going, which is not necessarily always an option for you.
We look what happened last year in August when the wind didn't blow in the UK.
Yeah.
It was a.
Well, I know, because we felt the effects of the price rises in country. We had over 30 energy companies go bust, and the governments had to step in because there was no backup plan. And that's what I'm saying. It's going to be very difficult for countries to just cut off the Russian option. And it's going to be very costly to kind of step in and cover the cost. So it's problematic. So therefore, is it unlikely that the politicians make these decisions?
I think in the short term, is it unlikely? Maybe. But I think in the long term, it kind of doesn't matter, because I think companies will look at their risk management, side of their business and say, it doesn't matter what the governments do in the mid to long term, I'm going to make sure that I don't get into this situation again. So I think, short-term governments may say we're cutting off Russian supply or not. But I think longer-term, someone is going to have to build capacity, because I can't see, utilities sitting here in 5 years' time saying, it's all okay, it all ended out fine.
ConverDyn will sort it out.
Yeah. So I think there's going to be a fundamental shift in how, people think around the fuel cycle and the fuel chain. But all of that, I think, is a net positive for uranium.
Yeah.
So, I don't see any downsides for the uranium demand side in those sorts of scenarios. We talk about all this underfeeding, and now they're talking about overfeeding. That's a 12 to 15 million pound swing.
Yeah, absolutely. So let's talk about some of the positives from the demand side. Okay, we mentioned China, 400 billion towards infrastructure, but you also touched on it briefly. SMRs, lots of designs out there, lots of companies out there, lots of different use cases out there. That's also good news. I don't think anyone's. Have you got any numbers on that in terms of?
Well, I don't think anyone's put a demand number on SMRs yet, and it's not just sort of one isolated design out there. There big companies, GE, Hitachi, Rolls-Royce, Bill Gates' operation. There's, China, the US, Canada, all investing time and effort into small modular reactors. And I think, the beauty about these machines is nuclear generates heat. It's a very good generator of heat. And you can use that for district heating, for green hydrogen, for desalination. So, if you think about a bank of mini reactors that you can connect to the grid to generate electricity, disconnect when the wind's blowing and the sun's shining, make district heating, hydrogen. I think the flexibility around that, and you can put them on existing sites. And in the US, they're talking about putting them on coal.
Yeah, exactly.
Station. You've got
infrastructure's there. Yeah,
connectivity. Hopefully the permitting's a bit easier. You've got people who understand how to run thermal plants. It's different technology, but so we don't know what that demand side looks like. I think the WNA are going to include that in their next demand side study.
Okay,
but I think that's a net positive again on the demand side.
Yeah, it's going to plug and play, isn't it? That's a really nice idea, and certainly to an existing coal-powered fire station. Brilliant.
Or maybe you can put it on existing nuclear facility sites.
Right. And what are the things, the kind of drivers that lead you to believe that the demand is increasing? I guess the EU taxonomy, that whole change of narrative that's gone on there. It's almost like politicians have been, because of the energy crisis we've experienced here in Europe, that the politicians have been given permission to talk about nuclear again. That's what it feels like.
Yeah, I think they're watching which way the wind's blowing. But if South Korea, change of leadership, a switch. The Dutch coalition government want to extend the life of the existing facility and build a new one. Yeah. The Belgians have extended the life of theirs. I think it's not out of desire; it's out of necessity.
Right.
We need to find solutions to a low carbon future, and we need energy security.
Who's going to tell the Germans?
I think, I think that's going to be a bridge too far. I think they're committed, they've made their decisions, and it's going to play out. I'd be very surprised if that turns around. But German demand is not going to drive this industry. If you look at what China's plans are, they're incredible. 50 gigawatts now to 75 gigawatts by 2025 to 110 gigawatts early 2030s. Yeah. Maybe they're over and under a bit, but they've constructed. Well, they had 17 at the time of Fukushima, 52 now. They're building 19. Yeah. So this is not a kind of a wish. It's a desire, a necessity, and they have the capability. They can do it.
So we talk about where's it going to come from, right? So you obviously had your option with Kazatomprom. I think there's a little bit of uncertainty as to where Kazatomprom will come out of this whole Russian potential sanctioning component, because they're a sovereign state, but at the same time they're very closely aligned with Russia as far as the West is concerned, and they are big producer of low-cost uranium. Where do you think the new uranium is going to come from? Because if you look at Canada, Athabasca, it's got some issues around the length of time for permitting. Fantastic deposits, no doubt about that. But can they get into production soon? You've got your African lower grade, but low cost, but lower grade stuff, which is a little bit easier on the permitting side, with decent scale to it. But who's going to fund that? China's traditionally looked at Africa as their kind of breadbasket, as it were. Do they step in? What does that do to the geopolitics? And then there's a little bit. Well, Australia obviously a little bit, but I'm not quite sure who the next cab off the rank is going to be.
So if we sort of take off the geopolitical wrapper and just look at pure resource. Kazakhstan's got a great resource base. They're operating at 20% below their subsurface levels, so they can there is capacity there. But it doesn't come on tomorrow. Yeah. I think by some of the reports from them suggest that it could take up to 18 months to ramp up their existing capacity, and then the development of new well fields and new resource basins or bases. Then you've got to overlay the geopolitics and portfolio diversification issues. Canada, as you mentioned, it's a great resource, but it takes time. Namibia, the two mines there currently, that product goes to China. The two restart operations, the Boss and Paladin, but in the context of the demand growth, it's not going to change the supply demand dynamic in any meaningful way. So I believe that in the 3 to 5 year time horizon, we are going to see the supply crunch issue is going to hit us.
It is. What's it going to do for someone like you? Because there's going to be all this demand out there, not a lot of supply coming through anytime soon. Part of your model, you want to go out there and buy these pounds and at a price that's going to be good for your shareholders. I mean, where's it going to come for you? How do you operate in that environment?
I think we don't chase size or scale. I think we've got a net asset value of close to $1 billion, around $1 billion. We're relevant. So if we're $1 billion, $1.5 billion, or $2 billion, what matters is, can we acquire those pounds in a value-added way. So we will issue equity when we're at a premium to net asset value and acquire pounds. If we're not, we won't acquire the pounds. We have the contract with Kazatomprom. I think it's an extremely valuable option in an undersupplied market. To buy up to $100 million a year at our option at essentially the spot price. That's a valuable option. So
how long does that option run?
It runs to 2027. So it's a 10-year framework agreement from the time of our IPO. So it runs through to 2027.
So you're fine, as long as the NAV ratio works in your favor.
Correct.
Right.
And I think, the pounds that we have today, the spot price is $52 a pound. We've acquired that portfolio, I think, at around $30 a pound all in.
Right.
So it's been a good story. I think convincing ourselves that uranium was at the bottom of the cycle back in 2017, 2018 was the right thing. And who knows where it goes to? Everyone's talked about incentive pricing for new capacity, $50 to $60 kind of. You look at inflation and capital inflation. I wouldn't like to rerun a feasibility study today and see what.
Well, I think some CEOs have been quite honest and said, look, inflation has hit us. Yet when we used to say 50 to 60, at one CEO say, but that's near 80 now. It's not an insignificant change. And maybe it's a good excuse to say, well, look, I can defer actually getting into production anytime soon, maybe. Or you say, no, genuinely, I need to make proper margin here because going forward, the costs are significant for the CapEx, but I need to understand where I stand in all of this. And maybe that's the kick up the backside the utilities need.
I think it's happening. I think it's just not visible because a lot of these contracts are bilateral negotiations. So you don't have visibility on them. No one stands up and reports their contract.
Yeah, but that's the opaqueness of it. So as a retail investor, you're like, crikey. But even some of the fund managers are like, I literally am not hearing anything, pounding the corridors. There's no clues. And even piece this together. I think it's interesting. Can we come back to your option there? Because that's really fascinating. What are the terms of that? Because obviously, as the price moves, I guess your price moves too.
It's a very mechanistic process, which works well because there's no judgment.
No arguing or negotiations. It's like, that's what it is.
We send a pricing notice. Kazatomprom come back within a defined period with a price. It's the average of the last two quoted weekly prices from Trade Tech and UXC.
Okay.
So you just look at the last two quoted prices. What's the average? That's the price. That price is held for 14 days, 2 weeks. We can go and finance. If we don't get the finance, we don't consummate.
Don't take the option. Right. Okay.
We can do all of it, none of it, multiple tranches.
Right.
And for Kazatomprom, they essentially get the market price.
So they're happy too.
And we're an additional customer.
So you're not obliged, but they are.
So if we exercise that option, they are obliged to supply. And then it comes down to the delivery schedule. So we've seen recently where the delivery schedules that we've been quoted or that we've agreed on have gone out a bit because they don't have a whole lot of uranium sitting in their cupboard.
Well, it's interesting actually. It's the cynic in me goes. So where does that actually physically sit? Does it sit with them? Or can you permission them to say move it to, I don't know, Cameco or whoever else would?
So the way the contract works is the product is delivered at Cameco.
Right.
So the Kazatomprom deliver the product to the Cameco facility. Once it's accepted and delivered, there's a book transfer from Kazatomprom's name to our name. So, we only see the product when it sits in the Cameco facility in Canada.
Okay. So that's quite good for you. That must
we either pay after we've got the product or through an escrow arrangement.
Understood.
We don't run any credit risk. Both parties run price risk because when we make the agreement, we agree on a price and the price can go.
So that's a price plus, say, whatever the average of the 2 weeks is plus delivery to...
No. That's the price we pay in Canada.
Got it. Okay, that's not too shabby, is it? Yeah. Okay. So for retail, looking at this story, your message to them is what? You can obviously go and buy equities in the market, wherever you see fit, whoever you think is going to go up in value for whatever reason, momentum or actual physical production. What's your USP?
It's a risk reward equation. So if you want 4 or 5 times your money, then maybe look at an explorer or a developer, but you're going to have to study what they have, where they are, permitting, technology, resource, all those sorts of risks. Take a view on it, and then invest your money. What we offer is 1-to-1 leverage. So we look like the spot price, and if your view is that the spot price is going to double, then you're going to double your money with us. Now, if the price falls off and you're an explorer or developer, you have 4 to 5 times leverage on the way down. We're 1-to-1. So it's just a risk reward. And so if you want to play the physical, or do you want to play all the other risks in
So if I believe that the price of uranium, because of the supply demand fundamentals suggest that we're going to be short, and what happens when things run short or are in scarcity, price goes up. If I believe that, then you're a nice bet for that kind of investing.
Yeah, exactly. Because you don't have to worry about geology risk.
Mining without the risk. I love it.
Where is the mine situated? What are the permitting issues? What are the local legislation issues? We don't have any of that. Our barrels sit in Canada, and we've got some in France at the Irana facility. So already produced in a barrel at a conversion facility.
Right. And at some point, I know with you and Sprott have said, we're not selling. At some point, because there must be some point at which you go, well, okay, we can now allow ourselves to sell some of this. It's gone to, let's say, $300, average 30. It's gone to $300. We'll sell some of this off. Would that ever happen?
I think that the big issue, and Sprott have certainly talked about the redemption mechanism. If the market thought that the pounds go into yellow cake and Sprott and can come out again, that will impact the spot price.
Right.
So we are a sequesterer of uranium,
a permanent sequesterer.
Yeah. Now in 2020 we sold a few pounds. I mean, we got to a 30% discount in net asset value after the first wave of COVID. Cameco had shut down Cigar, so we sold 300,000 pounds to Cameco, and used that to buy back our own shares. But that was kind of a one-off situation. Right. Maybe if we do get to the supply crunch that I think we will hit, a utility decides, I'll pay a 30% premium for yellow cake, and I'll take their inventory.
Or government decides. Because
someone will have to convince our shareholders that to part with their equity based on the volume of pounds that we own. It's already produced in a safe jurisdiction, location.
Interesting times for uranium and all the players in it.
It's extremely interesting times and very exciting times.
Thank you so much for coming in and joining us. Great stuff, Andre. Thank you.
Thank you.